Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook. Briefly, first we start with the European markets. They opened higher on Friday after getting hammered the day before as crude oil prices saw a slight rebound. The Stock 600 index was up about 1.4%, but of course a spike in oil price gave European equities a flip on Friday. Crude oil prices also, as we mentioned, jumped around 6% on Friday after comments by OPEC energy minister sparked hopes of a coordinated production cut, although said a move remained unlikely and the oversupply would persist. European investors will keep an eye today on the latest flash fourth quarter growth data from the Eurozone coming out later on Friday. Meanwhile, in Asia, markets dropped sharply on Friday with the Nikkei 225 index tumbling about 5% as well. Asian banks and of course financial stocks remained under pressure overnight following drops in their European and U.S. counterparts as concerns are keeping their mount over a potential performance in a low growth and low interest rate environment. Japan's Nikkei 225 index, which of course reopened after a public holiday on Thursday, dropped 760.78 points or 4.84% to 14,952, falling from 7 past straight sessions to its lowest since October 2014. The Nikkei 225 has been on a downward spiral in recent days as the yen rapidly strengthened against the dollar, with the index extending down more than 11% for the week. During, of course, the Asian trade, the dollar-yen pair was at 112.50, up from the session low of 111.91. It had traded as low as 110.98 on Thursday, compared with levels over 120 at the beginning of the month. The yen has risen sharply since the Bank of Japan's move to a negative interest rate policy. In other important news, however, we're also eyeing the commodity sector. Gold over there for Friday clung to sharp overnight gains that pushed the metal to a one-year high and looks set to post its biggest week in over 4 years as stock market turmoil choked safe haven demand. Gold rose to $1263.60 an ounce on Thursday, its highest in a year, before pairing some of the gains to close up about 4% in its biggest daily gain in about 2.5 years. Assets in the SPDR Gold Trust, the world's top gold ETF, rose 2% Thursday, and of course the biggest inflow in 2 months. The total holding of the ETF have risen by 3.8 million ounces so far this year after the 3 straight years of declines. Also helping gold was dovish comments from the Federal Reserve Chair Janet Yellen, who of course stretched the U.S. central bank was not on a preset path to return to policy to normal, on a worsening meltdown, of course, in global stock markets. Although Yellen said she still expects the Fed to gradually raise rates this year, federal funds rate futures have almost completely priced out the chance of a further rate hike. Crude oil prices in the energy sector jumped more than 5% on Friday after comments by an OPEC energy minister sparked hopes of a coordinated production cut. However, yet analysts are looking further as to such move might remain unlikely and the oversupply would persist. West Texas Intermediate futures were trading at $27.57 a barrel, up about 5.19% or $1.36 after their previous settlement, which was low at 2003. Despite higher West Texas Intermediate prices, investors expect little change to OPEC and non-OPEC producers agreeing on a common policy, and that low prices as a result of oversupply would likely persist. In today's calendar, the most important is the preliminary GDP report for the Eurozone at 9 o'clock, and of course at 13:30, U.S. retail sales. That's all for today. See you next time. Bye-bye.